In order to facilitate effective cash flow, of course, you have to do the work, but then you have to bill timely and collect timely. I'll have clients say, I'm so busy, yet they don't have any cash. And I'll ask them, why don't you have cash if you're so busy? Well, I don't know. Well, normally it's because they're either not billing timely, they're not following up on the billing to collect timely, and sometimes they're just not pricing their goods and services appropriately.
Hi, I'm Rich Robertson, the founder of Business Battles Force Multiplier. This show is focused on perseverance and success. Over the years, I've had questions, how to do this, or I'm in a tight situation and I wish I had, somebody to call or get some advice from. That's what this show is about. I want to share some of my experiences, bring in some people who have helped me over the years. And today is one of my good friends with me, CPA Don Butt. How you doing, Don?
Excellent, Rich. I appreciate being able to spend time with you this afternoon.
Yeah, and I appreciate the help and advice that you always give me as well. And I want you to share some of that advice with the listeners. We have listeners that are thinking about going into business. We have people who are in business now and are struggling a little bit. And we have some CEOs that could use some of your help as well.
Great. I'm happy to. I've been doing it a long time. In fact, you and I go back a long time. And if you don't mind, I do have some stories that I'd like folks to hear. The first time I met you professionally, my CPA practice was in downtown Frederick. One day, a young man walks in the door. My office manager said, there's a young man that would like to see you. I asked who it was. It's a gentleman named Rich Robertson. He'd like to introduce a company he's starting. And I remembered the name from the classroom experience. And Rich, I want to compliment you because one of the first pieces of advice that I would give someone who wants to go into business is have crystal clarity about not just what you're going to sell, what you're going to provide, but what characteristics are going to make your business different, unique, special from the businesses that you're competing with. And you walked in that day, and I commented to Diane, my office manager, after you left. I said, that young man is very clear about what he wants to do and how he's going to do it. And one of the impressions that you left with me was that you were going to emphasize not just customer service, everyone says that, but you were going to emphasize having confidence in your business to deliver consistent customer service. Then you probably don't remember this. I wasn't as diligent as I should have been about backing up my information in those days. And I remember being in the tax practice and having a hard drive full of tax returns and audit reports and all this other stuff. One day the hard drive became corrupted. I did not have a recent backup that was recent enough. Probably in a semi-panic, I called your firm. Your folks came over, took out the hard drive, and I was told had to send it off to a clean room or whatever magic you did, but you recovered essentially all of the critical information. That would have taken me many, many hours to recreate. So it's interesting how the cycle of us getting engaged, I think I started out by helping you develop some of the financial and accounting knowledge about being an entrepreneur, but then you bailed my business out later on. But what struck me most was how clear you were about how you sought to deliver what was going to make your business special. And I think that's one of the weaknesses in many businesses. They know what they want to do, but they don't have clarity on how they want to do it, which means their employees don't have clarity and their customers probably don't have clarity.
To be fair, the reason why I was the way I was, because I just had a little baby and new job. So Yeah, and you were a very good professor back then. And I got to tell you, that wasn't easy um, because I was working full time and then I was coming to your class in the evenings. And when I say working, I worked. I mean, my father was a contractor, and you didn't know this, but I was already in business at 19 years old when I took your class because I had a home improvement license.
Oh, I didn't know that.
Yeah, so that was my actual first business, and so I work all day, jump in my Corvette, and come to class. That's true. I had a brand new Corvette, and because I was all about money back then, and I come to your class and I was beat. I mean, I was just beat. I could barely hold my eyes open through your class, and I just remember the amount of work we had to do back then, and plus, this was 35 years ago, probably. Um, and and you were really patient with me, which I appreciated. And at that time, I switched my major from criminal justice to accounting, and and then I decided I couldn't I couldn't sit behind a desk all day. I loved accounting, I just couldn't do sit behind a desk. So I switched my major to business after that, but that was a struggle. And so years later, as you know, I got my security license, and I went back and I took some finance classes. And I thought, well, before I could take finance, I need to freshen up on my accounting. And so it had to be 20 years later, no, probably 15 years later, I took an accounting class, and I'm like, where's the work? Where's all the work? I mean, I remember all the work we used to have to do when I went to college. Now these kids, of course, I'm, almost like 40 some years old. These kids had nothing. There's no work. And I remember I know you used to teach out at the college as well, at the Mount. I remember you said something about that one time, how it's gotten dumbed down.
Well, it's a different world. I'm seeing that in a number of areas with students. Accounting, by definition, is a very detailed subject matter area. In fact, I think one of the bad names that accounting gets is, and I thought just as you did, that accountants sit in an office all day, write numbers in little boxes, do those kinds of things. But I didn't appreciate how the act of accounting empowers business folks to be better at managing their business. A couple of moments ago, I spoke about having clarity about how a business should seek to deliver its business purpose. And I think that having clarity with your strategy helps you better deploy your resources. We all have limitations on resources, whether it's dollars or manpower, whatever it happens to be. And if you have clarity on your strategy, when you deploy those resources, you make decisions by looking through this strategic lens, and every decision needs to empower your success towards that strategy implementation.
Okay, so that leads me up to my first question. What is your current assessment of the health of small and medium-sized businesses in today's economy?
Boy, it's really, when we think back the past couple of years to COVID, I had clients that had some of their best years ever during those COVID years, and other clients, some of their worst years ever. Right now, I think I admire anyone who is willing to make the step to be an entrepreneur, because there are many challenges. You're working a lot of hours, you're wearing a lot of hats. I think, unfortunately, the regulatory environment makes it increasingly difficult to be a small business. I think the various filing requirements, the involvement of the regulations and the potential penalties, that's not getting any better. I keep hearing that government is promoting small businesses, but every time I turn around, there's more and more roadblocks. So I think it depends upon the small business environment. Depending upon your business, I have a number of clients that are in the trades, and they're as busy as they would ever want to be. I have other clients, though, and they're wondering how they're going to bring in their next revenue source.
So, what is the most common accounting mistakes you see companies make today?
Most common mistakes I see is they don't manage cash flow appropriately. And by managing cash flow, what I mean is your financial information set should empower you to a degree to be a fortune teller. You should be able to get predictive value out of those financial statements. At the end of the day, it's all about cash flow, sales, profits, cash flow. And unfortunately, businesses that are in cash flow difficulty are forced to make decisions that don't align with the strategy. They take on atypical loans. They're not able to take advantage of discounts. They can't train their employees the way they want to train. So the number one mistake I see is in very small businesses is they don't devote the time and resources necessary to get the most out of their accounting system so that their accounting system gives them good predictive value on not just where the business has been, but where the business is expected to go.
Is that one of the top reasons you see companies go out of business?
I'd say the number one reason I see companies go out of business, it ends up being clearly cash flow. A lot of times, especially with entrepreneurs, they scrape every dollar together to get the doors of their new business open, but then they don't have any staying power. If I meet with a new business, I talk about strategy first. Why do you believe you're going to be successful? Give me reasons why someone's going to be loyal to your business and not the business down the road that does essentially the same thing that you do. Convince me. If they can't convince me, they probably can't convince their staff or most clients. So I ask them to review that first. Then I ask them this. Talk to me about your cost structure. If your business increases 20% in activity, which of your costs will change? Which of your costs will stay the same? I also advise businesses they can't be the bank. In order to facilitate effective cash flow, of course, you have to do the work, but then you have to bill timely and collect timely. So many times businesses, I'll have clients say, I'm so busy, I'm so busy, I'm so busy, yet they don't have any cash. And I'll ask them, why don't you have cash if you're so busy? Well, I don't know. Well, normally it's because they're either not billing timely, they're not following up on the billing to collect timely, and sometimes they're just not pricing their goods and services appropriately. But it's a key point if someone says they're busy, they're busy, they're busy, but they can't pay their bills. Something's wrong there.
Yeah, that's exactly what happened to me after I first got started, and we got into hyper growth cycle, and it just boomed. And I got way behind on accounts receivables. And so I wrote a program, software program, that I instituted into the business, part of our workflow. And when the ticket got closed out, it turned into an invoice automatically and got emailed out to the client. I took care of my accounts receivable problem by doing that. It was amazing how much more money in cash flow I had when after that I made that change in my business model.
Well, that's a very good point. From a payables perspective, the area I see businesses get into trouble is paying payroll taxes when they have employees. Your vendors, you have to pay them or they'll cut you off so you won't get product. You have to pay your employees or they won't show up on Monday. But the IRS doesn't send you an invoice.
No, they don't.
You have to track it. You have to track it. And you skip a couple of weeks, depending on how many employees, months. Next thing you know, you're $20,000 down. Now you have penalties and interest. And it's not just the Social Security, the Medicare, and the state and federal tax. Now you've got unemployment insurance. Having an employee, it always costs, just as a rough guess, and this is with very modest benefits. If you're paying an employee, whatever it is, you add 20% to it, and that's assuming you don't have elaborate benefits, maybe full retirement, full health insurance, those kinds of things. But the number one area I see businesses get into troubles, they fall behind on their payroll taxes. The way it is now, there are a number of payroll services out there. For many small businesses, they're better off to get a payroll service to handle the payroll piece, have that payroll service debit their bank account, extract all of the dollars up front to cover all of the taxes, including the matching taxes, and do that. But, like any business, anytime you have a subcontractor, you've got to keep your eye out to make sure that subcontractor is doing what they need to do.
Right or wrong, the view of most owners is, laissez-faire, let the CPA do it. Should a CEO really trust the CPA 100% and just hand all the accounting off to him?
Well, I think it's if the CPA is external, their primary focus is probably the tax return. And most small businesses are cash basis taxpayers. One of the challenges with looking at a cash basis income statement, sometimes it's called a statement of profit and loss, the income statement. It shows you income and expenses and profit. One of the challenges with a cash basis statement is it could be very misleading. I had a client years and years ago, and I'm looking at their cash basis income statement, but from the way they were talking, I could tell they didn't sound like they were profitable, yet I'm looking at a cash basis statement that says they are profitable. Couple more questions and I find out they have a desk drawer full of unpaid invoices. And that cash basis income statement doesn't show those invoices. There are two primary ways to prepare financial statements. The accrual basis, which gives you a much more accurate picture. Accrual basis says you book revenue when you earn it, you book an expense when you incur the expense. Cash basis, you book the revenue when you get the check, and you book the expense when you write the check. Accrual basis is much better from a planning perspective. One of the challenges many businesses have, and I see this all the time and I understand it. I've got an office manager. That person answers the phone, does this, that, and the other. And they do some bookkeeping. But the starting point in the first class you enter, back in the day, we spent a lot of time working with students so they understood transactions analysis, how to record transactions. Because if you know how a transaction is to be recorded, then on the back end, when there's something that looks unusual, you're much more effective at finding out what's causing the challenge, the anomaly. Now, students don't get trained as much in transaction analysis. And in fact, I attended a Maryland CPA Accounting Educators Conference 2 weeks ago, and we invite employers. And one of the main problems employers have with new hires is they can't problem solve. The employer will say, well, you're looking at Rich Robertson's financial statements. Something looks odd. Find out what's causing it. They don't know where to begin because we don't do the ground level work that we used to do back in the day when you were a student. So,
and that's what I was saying. No, that's what I was talking about in that accounting class. When I went back, I had hardly any homework to do. I'm like, you got to be kidding me. It was so easy.
I know.
So that's when I started encouraging everybody to go to school, because it's not like high school where you had to do a lot of work and then you go to college had to do a lot. No, it's not that anymore. It's almost a fun time. It's just, it was a joke, really.
I'll get back to your question about how involved the CEO should be. At the end of the day, whatever the it is going to drop in the CEO's lap. I think the system around the CEO needs to empower the CEO to be an effective decision maker. For example, you and I were looking at your financial statements the other day, and one of the characteristics about your presentation is you have what's called the dashboard. Many businesses have that. And you've identified key performance indicators. What are the areas where I have very specific targets that I need to measure progress towards achieving those targets on? Businesses have that. You know, Rich, I was actually teaching a class the other day and looking at some research papers. And one of the articles that I had students read was analyzing something called the performance gap. And the performance gap has to do with a company's budget compared to its actual results. And normally that performance gap is about a 35% shortfall in actual results reaching budgeted or expected results. And there are various reasons why, but one of the other details in that article was only about 15% of businesses actually track detailed actual against budget. Whenever you evaluate financial outcomes, you want to evaluate your outcome against a benchmark. For instance, if I said to you, Rich, I've got this company I'm doing work for. Their profit margin last year was 6%. You think that's good or bad? You're probably going to say to me, Don, well, I can't tell you if it's good or bad unless you give me some reference point. If you tell me that they've been averaging 15% a year profit margin, I'm going to tell you 6 is pretty poor. But if you tell me they've been averaging 3 or 4%, I'm going to tell you 6 is pretty good. So the 3 benchmarks that all businesses should establish, certainly 2 of the 3. The first one is comparing yourself to industry standards. Now, sometimes that gets difficult with a small business. But sometimes if you're a member of a trade group or an industry group that's specialized to businesses in your industry, they might have statistics that are very usable that you can gauge yourself against. But setting that one aside, the 2 that you clearly should do, every business owner, is compare current year to historical trend. Again, financial statements and financial presentation should have predictive value. Here's where I'm coming from. Where does it look like I'm going? Because you want that financial information to raise the red flag early on. You want to address issues before they become real headaches, real problems. Financial information, and when I say financial information, I just don't mean dollar sign information. I mean information that has to do with data analytics. For example, if I'm in a service industry, I might need to track percentage of billable time of my staff. Well, billable time doesn't have a dollar sign in front of it, but it ends up translating to a dollar sign. Or if I'm a retailer, I might calculate inventory turnover, or I might look at how many days my accounts receivable aging is. So a well-rounded collection of data analytics, your key performance indicators, should focus on the areas which are predictors of your business financial and operational success.
That reminds me when my daughter started college. She wanted to go into she wanted to go into coaching, but there's no real, community college, there's no coaching classes or coaching degrees, I should say. And so she went, so I was saying you should do some type of childhood development, type of degree. And so she went to the counselor. And the counselor, she came home and I said, okay, what did the counselor say? What should you take? What classes should you take? He goes, well, she said I should do general studies, And I said, do you know what a dream is? She says, what? I said, it's a goal without a plan. I said, when you're going to have a goal and we're going to make a plan how to get there. And the KPIs in business is almost the same thing. Yeah, you would like your business to make $2 million, but you're just sitting dreaming about it until you create some KPIs, some points. And so we're looking at ours and you saw where I'm behind. So when I'm behind, I don't get discouraged. It just kicks me in the butt. Like I got to do something. I got to get going to get this going again, and
But the
that's what it's all
nice
about.
thing about what you did is you not only identified the KPIs, you quantified them so you knew you were falling short, but you could quantify how much you're falling short. And what I liked about yours, it just wasn't a schedule that showed the most recent month. We could see the trend, how certain areas were building favorably and other areas were falling behind.
Yeah, and I didn't have that for years. I didn't do that, and it's no wonder I've been stagnant for years. That's one of the key areas, and so that's important. If you want to grow a business, you got to have KPIs. You got to have some directions, and you got to have a plan on how to get there.
So the business needs to track actual performance against budget, actual performance against history, and then if it's available, maybe actual performance against the industry. One of the reasons many businesses need to do that, let's say I'm going into the bank, small business loan. Bank's going to ask for tax returns, financial statements. They're going to have someone enter the data. They're going to compare it to Robert Morris Associates reports or some data set, and they're going to say, Don, you're a home builder. Why is your gross profit margin 30% when the industry average is mid-40s? You want to know the areas of weakness before the bank tells you what your areas of weakness are. But for many small businesses, the comparables looking at your business to the industry aren't that good. It's a starting point, and I'd certainly take advantage of what's available, but certainly comparing to the budget. The number one weakness I see of the real small businesses is very few of them. That 15% makes sense to me. They just don't have a budget that's detailed. And the reason is don't have enough time. I'm familiar with a particular construction industry client. And when they were first going into business, I said, would you like to be able to track profitability for every home you build? Oh, yeah, we want that. Well, the only way you get that is if you can devote the resources to entering the budget to construct that home and then track actual expenditures against the budget. And, where it fell apart because they said, well, Don, we'll order, 500 sheets of drywall, and some of it goes to one house, some of it goes to another house. And it was taking too much time for the bookkeeper to separate those invoices between which house to charge the cost to. So I get it, I understand it, and I agree it does take time. But then at the back end, I'll look at them and I'll say, well, I see you finished 10 houses last year. Which ones were the most profitable? Well, I think, and as soon as I hear I think, that tells me you don't really know. You're making a somewhat educated guess. But I also understand that you're devoting resources to the bookkeeping function. But if you don't have a good bookkeeper and you don't capture the information correctly at that entry level, it's tough to be accurate and have good predictive values if you're starting out with contaminated data to begin with.
This is how naive I was when I first started my business. I expected the accountant to do everything. And, when I wasn't making money, I gave it to the accountant and said, okay, how come I'm not making money? And actually now I've learned over the years, that's really not your job either. We're
But
the
a
ones
good
that,
accountant should help you organize your thoughts and quantify the implementation of your strategy to do what you've done, establish the important KPIs, not just any indicators, really pick the indicators that are predictors of your success or predictors of weakness.
yeah, well, 10 years into it, like you said, I was super busy, but not making money.
Right.
And I couldn't figure out why, you know? And so, and I told you, I just resolved my accounts receivable problem, but I still wasn't making money, So I went to the accountant and I said, what's wrong here? What am I doing wrong? And they really couldn't pinpoint anything, at the time. So I was very discouraged, and I didn't know where to turn or what to do,
That's,
So
oh, go ahead.
go ahead. No, go ahead.
It's important to have your baseline expectations, that budget in place. I would say, Rich, how do you generate revenue? And you might say, well, we have individuals on staff and we sell their time. Rich, what percentage of their time needs to be billable? You might look at me and say, Don, I'm not quite sure what billing rate to charge. And then we'd look at two things. We'd look at what the market going rate is, but then we'd also look at your cost structure, look at the factor of billable hours, and we would calculate how much effectively you need to bill and collect from those folks. But most of the time, you should be, not just you, anyone should be able to isolate the primary causal factors of why we're busy all the time, but we can't pay the rent. There's something, maybe
Yeah.
it's structurally, but a good accounting system and an accountant that's more than just looking at the numbers. They need to step back and look at your business or help draw key characteristics of your business out from you.
And you brought up a good point. I got to tell you, when my dad being in business, when I wanted to start my computer business, I took my business plan to my father. And because he was really business savvy, he was smart. And so I took it to him. I said, okay, what's wrong with this? And he couldn't, he could say it's not going to work. I said, well, okay, fine. Tell me why. Well, you're not going to sell $250,000 in the first year. I'll do that. I don't care about that. I know I can sell that much. And I said, so what's wrong with the plan? And other than me being the problem with the plan, he couldn't really pick my plan apart. He just didn't have the confidence in me that I could do it, which I expected. But I was looking at the plan and he couldn't pick it apart. So I left there confident I was going to succeed. And so I went and started my business, and right away, this is what, back in 1994, right away, computers were becoming a hot thing, personal computers, and everybody was going to Taiwan and buying the cheap parts and building cheap computers. And I didn't do that. I would not do that. I stuck with the high quality parts because I just came from working for a computer manufacturer. I understood what the quality parts were and how valuable components were when you're building a PC. And so I was always the highest priced guy in the neighborhood out of the dozen competitors I had at the time. And I wouldn't budge. And I can't tell you how many people come in, I give them a price and they walk out the door and go buy from my competitor. And that was disheartening. But I was going to stay with the quality of service that I told you in the beginning that I was going to provide. And so eventually what I found out was those same clients came back in and wanted me to fix that PC, junky PC that they bought from somewhere else. And of course I charged top dollar to do that, and so that's how I secretly, became more profitable than my competitors. And that's how I outlasted all my competitors and became the oldest computer company in Frederick because of the quality of service I was provide. And I didn't care what the going rate was. I didn't care about that. I charged what I needed to charge to be successful. I would go into a company and make a technology recommendation. And they say, well, the way we've been doing it is fine. We've never done, we've been doing it this way for such and such time. I'm like, oh my goodness. And I knew, and earlier to the point when I asked you about, well, the number one reason why you see companies go out of business and you're talking about cash flow, I've said for the longest time, the reasons why companies go out of business, the two main reasons are one, poor accounting decisions, and two, poor technology decisions. I mean, countless of companies I've seen go out of business over the years that because it costs $10,000 or $20,000 or $30,000 to upgrade their technology, where they can, pay $30,000 one time and replace 3 employees, they decided to throw labor at that problem and keep the employees and not pay the $30,000 for the technology. I mean, that's why they're no longer in business.
You raise a very good point. If you look at the accounting profession, insurance profession, many professions, because of the use of technology and computerization, they're doing 5 times the work they did with 3 or 4 more people.
And less productivity, by the way.
Right.
Less productivity today than any other time. From 1970, the business productivity has dropped year after year after year, and that's after the invention of computers, personal computers. Yep. Hey, okay, so real quickly, for people starting out in business, what is a net income statement, and what's one of the key aspects a CEO should understand about it?
Right? Sales, profits, and cash flow over a period of time for the month ended, year to date, those kinds of things. So the income statement should give the CEO, and it should be an accrual basis income statement, show sales, profits, and cash flow, but should show it against benchmarks. The other point I'd make is when I work with businesses, I like to change up the format of the income statement. So the top section's revenue, but then the second section of cost will be those costs that tend to vary as revenue varies. If I said to you, Rich, if your revenue goes up 30%, you and I were looking at different KPIs, and I said, Rich, if you hit those numbers, what's it going to do to your staffing need? What's it going to do to your space need? Because I want the business owner to understand as they start making progress towards achieving the budget, how might that impact their cost structure? Do you need to add new positions, rent more space, put more trucks on the road,
That's a good
whatever?
point. No, that is a very good point, because that's a problem I have now, and most businesses have, because all the recurring expenses we have. So, like, when I resell threat protection software, my management software, okay, you're right. The more clients I get, the more software I have to purchase, which raises my overhead. The more
Right.
expenses, cost of good expenses I have. So I have to keep weighing, is it really worth? Give you an example, Microsoft. Most MSPs, like I am, IT companies, they'll resell the Microsoft email boxes. It's called O365. They'll resell that. So Microsoft they might get from Microsoft for like $5.50, and they turn around and sell it to the company for $7 a mailbox. So they're making $1.50 a mailbox off of it. Okay. I'm like, that's not enough profit margin to make it worth raising my overhead. Where I got to pay, Microsoft $4,000, a month, but I'm only, collecting like $6,000 for it, or $5,500, $5,500 for it. It's not worth it to me, and to have that extra overhead. And there's so many businesses now are getting into the same scenario where if I add more employees, I got to get pay for email box. I got threat protection software. I got to get, their PCs. I got to pay more workman's comp insurance.
Right.
It just snowballs when they add. So that revenue really has to justify it. And I don't think enough employers or CEOs are really paying attention to that.
I agree. The balance sheet is the second financial statement. The balance sheet gives you a snapshot on a specific date. What's your cash balance, accounts receivable, inventory levels, those kinds of things. If you picture in your mind a large T, just a regular T, and on the left-hand side of that T, you list your assets. Assets are the economic resources owned by a business: cash, receivables, inventory, trucks, whatever it happens to be. The right-hand side of the balance sheet tells you how you paid for the left-hand side. There's only two ways to pay for it. Debt, use a creditor's dollars, or equity, use your dollars. And on the balance sheet at that point in time, what the balance sheet is reasonably useful for, if it's on the accrual basis, is to show you your current assets. How much cash and how much receivables do I have that I'm probably going to collect? The regular balance sheet I've never liked because it uses the term current assets and current liabilities. The problem is the definition of current is less than a year. Well, there's a big difference in my mind to be presented to the CEO to empower that person to be a more effective fortune teller and decision maker. I want to be able to look down the road and anticipate where this business is going. If those financial statements aren't helping the CEO do that, those financial statements need to be redesigned and coupled with your key performance indicator dashboard, give you the information you need. And I want that red flag to knock me down. It comes out. I don't want 10 pages of all this detailed information and I have to really dig through to find out the important stuff. I need to be smart enough to isolate what's most important and have it jump out at me and be so obvious that I can see the problems coming.
What is the most expensive cost a business has today?
Since many firms are service-oriented firms, it's the personnel cost. And more what
Payroll.
I'm hearing, again,
Payroll.
from that Accounting Educators Conference, it's getting talent. And part of the challenge is the talent they need isn't matching with the skill set of what's out there. Sure.
It's unbelievable.
And you hire someone, let's just use 50,000 a year as a round number. It's not 50,000.
No.
It's at least 60,000. And that's before you really add, if you add retirement, health insurance and training and vacation and sick, all this other stuff. That's why it's important for businesses that bill folks out by the hour, accounting firms, law firms, your firm to a degree, even companies that provide services, a plumber. They have people, they're sending those people out to houses. They've got to have them billable a certain number of hours at a certain billing rate. But it's getting more difficult.
Okay, give me some inside baseball. I ask everybody, all my guests this. Give me something when a person or a company is looking for an accountant that they wouldn't know about an accountant, or it's not an accountant's favor for them to know.
And this is what I would expect out of an accountant. I need to help you. I need to help you turn accounting information into value-added information for your business. I don't want you to just look at the accounting function. Well, I got to do it because I have to do a tax return. Got to get the bank financial statements. I want you to say, I see the potential in accounting information, and not just dollar sign accounting information, really the analytics from the business. I want to convince you that I can empower you to be a more effective decision maker. If your accountant isn't selling themselves that way, I think they're being short-sighted.
Well, Don, I really appreciate your time. This has been fun and
Thank
very
you, Rich. I
educational.
always enjoyed speaking with you.
Yeah.
And again, as a compliment, it is, I'm an old man now, but I remember you being that bright-eyed boy in class, and then to reconnect years later, it's pretty cool to do that.
Yeah, I really appreciate it.
People, if you've never been an entrepreneur, people will say, oh, Rich, it must be great. You own your own business, this, that, and the other. They don't see the 70-hour work week. And, you can't just leave it at the office. Yeah. None of us can. So,
yeah. Well, I'm telling you, this has been the toughest 3 years. This past 3 years have been my toughest 3 years out of 30. And it all started when they started paying everybody $300 extra a week to stay home. That's when it started. COVID had nothing to do with it. That they single-handedly destroyed the work ethics of America when they did that.
I agree with you.
It's been unbelievable. And businesses, we've been busy, but again, production's horrible. Now, I got a great staff. I really do. And they work hard. And they get disgruntled when we hire somebody that's not working on the same level they are,
right,
or comes in with an attitude or something like that, and so I have to turn them out quickly. I got to keep my troops happy, and I'm going to, but it's hard. We have to go through a lot of employees just to find one good one.
Well, Rich, I wish you much success going forward. Thanks for sharing time.
Yep. Thank you very much, Don. But don't forget to like and subscribe. I do these podcasts for business owners and CEOs monthly, and thank you for watching.